What's up, everybody? It's Stas here. Welcome back to another video. As you guys read in the title of this video, I just wanted to go over the top 3 stocks and ETFs that I'm currently watching for the third week of March in 2018. So today is Monday. It's March 19th, and I just wanted to cover this topic briefly with you guys and just let you know the top 3 stocks and ETFs that I see potential in right now. And let's just hop right into the topic of this video, guys. So this platform that I'm using is TD Ameritrade's Think or Swim platform. This is what I use to analyze all my stocks and pretty much identify where to buy and where to sell. And I highly recommend it for anybody that's new to the stock market. So we can see right here that Gush is actually the #1 ETF that I'm watching right now in terms of profitability percentage and amount of money that I see it offering. So if we look closer at this particular chart, actually, let's just look at this chart right here. We see that Gush is showing familiar patterns, common patterns of it topping off at about $23, $24, then hitting bottoms of about $20 to $21. And if we look into the 20-day chart, we can see this even closer. And this is why I see a lot of potential in Gush. And before we get into that, we see that it's actually fallen 7 to 8% today. It's down 7.86% today. And whenever a stock or an ETF falls a big amount, like 8% in a single day, that opens up room for profit and potential for growth, if you put money into that particular ETF. And we see with Gush that it's actually done this particular trend, this particular pattern a couple of different times. So we see there's one support level here at about $20, and there's another support level here at $21, which it actually failed to hold above. So we see that it broke below this support level of $20, and this is why Gush opened up huge potential in my eyes personally. So I see Gush falling down to levels of about $20 to $20.50, and that's where I see a lot of potential in this particular ETF. And for those of you guys that are new, Gush actually trades based off of this particular index right here, the S&P Oil and Gas Exploration Index. And if we look at the 180-day chart, this looks pretty much identical to the Gush chart. We see this chart right here. This is the index, right? And this is the Gush chart. So this is pretty much an identical chart. So whenever Gush performs the way it performs, it's based off of how this particular index right here, SPSIOP, performs. And we see that this particular index is down 3%, almost $146 today. And that opens up, again, potential for profit for Gush. And if we see back to that 20-day chart, or if we even go right here, let's say, we see that Gush has been doing this particular pattern, like I said, a couple of times. It topped off at $24, back down to $20, up again to $24, and then it formed a new support here at $21.50, back up to $24. So this is a particular pattern, and it's a consistent pattern that we can hop in and capitalize on. So we see that it's at $20.70 right now, and it's approaching that $20 support level that we were talking about before. So if we wait for Gush to start to consolidate, form that uptrend again, and have that EMA line be pointing up, and we see that the index itself is performing well, that is when we want to put money into Gush. Today is Monday, like I said. I'm not going to be taking a position today on Gush. I'm probably going to be waiting until tomorrow, Tuesday morning at pre-market hours and market open to see how it's performing. But if we see closely the potential profit that Gush has to offer compared to the potential for loss, we see that, let's say if we got in at about $20.50 and we wrote it up to $23, let's say, at the low end, up to $24. Up to $24, it offers 15% for profit, and that's on the high end, and the low end offers about 10% at about $23. So 10 to 15% potential for profit. And if we got in at about $20.50, let's say, it really only offers about 1 to 2%, or let's say 2 to 3% potential for loss if it goes from, let's say, $20.50 down to $20 and below. So that is a pretty good risk-reward ratio, 2 to 3% potential for loss compared to 10 to 15% potential for profit. That's very good in my opinion, and that's why Gush is the #1 ETF that I'm watching for the third week of March in 2018. So the second stock that I'm watching, guys, is Tesla. This is another one that I've traded a bunch on my channel, that I've actually talked about a bunch on all of my videos, on some of my videos. And we saw in my previous video discussing Tesla, we talked about this ascending uptrend pattern that where it was creating higher lows. We saw that it hit a low of 292. 202, then it hit $303, 311, 315, and 326, creating higher lows. That just shows that it was on an ascending uptrend pattern, as we can see from this particular trend line drawing that I drew right here. And we saw that it failed to hold above this particular trend line, and it broke below the current pattern that it was actually on. So now you can see, guys, it's at $310.20 per share. It's dropped about $11 today, 3.5%. And like I said, guys, when a stock falls, that opens up potential for profit. So this is why I'm looking very, very closely at Tesla. And where we see, where we see support levels with Tesla, we see that it's actually at a support level right now. The $310 price point for Tesla, like that 310, 311 level, that is a very valid support level. We see it's right here. It popped at 310. Here it popped at 310, and it popped at 310 here. That's 3 different points where Tesla was able to pop above $310, and that's why I'm closely watching Tesla right now. And what I want to see Tesla do, guys, is I want to see it consolidate, form an uptrend and break above that EMA line and have that EMA line be pointing up, because that's a confirming sign of an uptrend pattern, and that's what we want to see with Tesla, guys. And right now it still looks like a falling knife right now, guys. And for those of you guys that do not know what that means, where it means like it's constantly falling, it hasn't shown levels of bottoming out yet. It hasn't started to consolidate yet. And that means I'm not going to be putting my money into it. And we can clearly see that from this particular chart. We see that it topped off at 360, which acts as a solid support or a resistance level, actually. You see it topped off 360 here, here, here. That's 3 times. So that's a solid resistance level. And if we go back to this chart, we saw that it has not formed a consolidation point yet. It's a falling knife, literally. So we're looking at Tesla to consolidate at about 310, 305, whatever price that it gets to, right? And we see that from that point, it has potential for profit up to 360. Let's say we got in at 312. Up to 360 offers, let's see, up to 360, it offers about 10 to 13% potential for profit, depending on where you want to take your profits and, where you're comfortable taking those profits. So that's where I see Tesla offering a huge amount of potential right now. But we just got to wait until it starts to consolidate and forms that uptrend, guys. Because like I said, again, it's a falling knife right now. We do not want to invest in anything that's downtrending as of now. So that is why Tesla is the second stock that I'm currently watching in the 3rd week of March of 2018. So the third stock that I'm keeping my eyes on, guys, is Apple. This is one that I've traded a bunch in the past, and this is one of my most, profitable stocks that I've actually traded in my entire life. So the way that I work with Apple, the way that I see Apple looking like right now, is clearly from the chart. We see that it topped out at $183, and then it fell all the way down to $174. That's where it's at right now in this particular moment in time. So from that particular price point down to where it's at right now, that's about a 5% drop in price. So 5% potential for profit has opened in Apple in the past week or two. So that opens up my eyes initially to Apple. And we also look at Apple's support levels. If we look closer at this particular chart, we see that $174, $175 acts as the first support level that we see right here, right? And that's where it's currently at right now. And that's where we're going to be keeping our eyes on with Apple to see if it actually holds above that particular price point. But Apple does, in my personal opinion, have potential to fall to $170. And with Apple, I've seen that this particular pattern has played on a bunch of times. So we've seen that Apple has held above that $170 price point mostly over the past couple of months, except for that big dip that it took to $150 that we're going to look at, right over here in this particular chart. We see that it was holding at above 170. I already have a chart line right here. It was holding above 170 from October, as we can see here, all the way to January. So that's 3 to 4 months consolidation at $170. So we can say that $170 is a strong support level for Apple. And if we look at the long-term chart, right now we're on the 1-year chart. We see that Apple is on an ascending uptrend pattern over the long term. And for those of you guys that do not know about Apple, it's going to be the first $1 trillion company, most likely, in my personal opinion. It has a lot of money. It's a very profitable company. It's one of the strongest companies in the entire world. So I don't really see Apple really falling anywhere below $170, $160 in the long term unless we hit a recession. So, like I said, ascending uptrend pattern. We see that it hit $138 low right here, $145 low, $150. So we see that it's creating higher lows. $150 here. You know, it was at 170 here, strong consolidation. Then we saw a huge dip, which was a good little market correction right here. We saw a dip back down to $155, where I actually bought in personally, and I wrote it back up to the 180s. This acted as a very, very great dip buy for Apple, and we saw it went back up to the 180s, and now it's consolidating and holding above that $170, $175 price point level. And right now, guys, I just see Apple showing a ton of value at the price point that it's at, and we see, you know, if we were to get in at about $175, and if we were to ride it up to $180, even $180, guys, that's 3% potential for profit. That's a good solid day trade or 2-day trade, you know, if you have a larger amount of capital where you find that being a sufficient trade to make. And personally, guys, let's say if you put in $10,000 and you swing trade it for 2 to 3 days, and you know, Apple has shown to do this particular price movement in 2 to 3 days many times before, and you can make $300 in 2 to 3 days with $10,000, and in a very trusted company, in a very large, you know, corporation that doesn't really have much risk associated with it. Obviously, there's risk in every single position you can take. But with Apple, in my personal opinion, it's one of the less risky stocks that I talk about on this particular channel. So any stock has risk, but Apple is one of the least riskiest stocks that I talk about on this particular channel. So I see potential in Apple. It has 3% back up to $180, 5% up to the recent highs of $183, and I see Apple blowing past $183 in the next couple of months. I see it being $200 in the next 2 to 3 months. So right now is a good dip buy in my personal opinion, and I'm going to be putting in a couple $1,000s into Apple as soon as I find a good price point to buy into. So if you guys enjoyed this video, make sure to leave a like, drop a comment, and subscribe. I hope you guys found value in this particular video and these 3 stocks that I'm picking for this upcoming week. But make sure to do your own due diligence, do your own research. Do not trade these based off of my personal opinion. I'm not a financial advisor. You should not be trading these off of my word specifically. So follow me on Instagram at Stas_Surfest_entrepreneurship. Link should be down below in the description. I post all of my profits there. So if you want to see how much money I'm making in the stock market, follow my Instagram and you'll be able to see all of that. So hope you guys enjoyed it. Let's make some money today, guys. Peace!